What I have for you this week is a little bit different from usual cases. We're talking about Pillar 2 and how companies can implement it practically. So this is not the theory of Pillar 2, but how are we going to do this? Now you can see here the documents we have so far. We have the tax challenges arising from the digital economy, and these are the rules for Pillar 2, right? And we do need these to fill in these forms. We've got the Pillar 2 Global Information Return, and this gives you the different tables as we know at this stage what they look like. And then we have the December last year document on safe harbors, which promised to make things lighter during a transitional period. The question is how much, because at least I find that not very clear. So let's see what it says. If we look at the introduction to the safe harbors and penalty relief, so this last document that we looked at, it says the transitional CbCR safe harbor will apply, so you will have zero top-up tax. One, where M&E groups report a total revenue of less than 10 million and profit of less than 1 million in a jurisdiction, right, based on the qualified CbC report. Then, so it says the de minimis exception, basically. The second one is if the M&E group has a simplified effective tax rate that is equal to or greater than the transition rate, and that goes down, I think, from 18 down to 15 during 24 through 26, or the M&E group profit is equal to or less than the substance-based income exclusion amount. So remember, you can get a deduction for the number of employees and the salaries that you have and the number of physical assets you have in a country, and that rate also comes down during the first years from 10 or 8 to ultimately to 5. And if this amount is bigger than your profit, then it's assumed that whatever excess profit there is very little, and therefore you have a lightened reporting burden as well. But there is in the same document, paragraph 34, saying an M&E that qualifies for transitional CbCR safe harbor on a jurisdictional basis is still subject to the Globe rules, and the safe harbor rules does not discharge the M&E from complying with group-wide Globe requirements. I'm not quite sure what that means. For example, an M&E would still need to prepare its Globe Information Return. So I think you still need to tell me about all the constituent entities in the group and who owns what, including information concerning the application of the transitional CbCR safe harbor in a jurisdiction where applicable. So for those of you who use my country-by-country reporting tool, these pictures will be very familiar. You don't need to use this tool, but I'm just showing where it comes from, because we are collecting some data, at least in the country-by-country report already. And the question is how much of this can we use in the transitional safe harbor and in the Globe report at all. So we have the jurisdictional numbers, then we have the data per company or per constituent entity, if you want to talk Pillar 2 language, with the TIN numbers and the jurisdiction and the company names themselves. Obviously, those one would want to see back in the Pillar 2 report. It'll be strange to have companies in either of the two reports which do not appear in the other ones. There are possible exceptions, but that at least is the idea. And the nice thing about doing this in Excel is you can add your own data sheets where you collect the data, and then obviously in the cells where you have the CbCR reports, you can simply refer to those data fields. I mean, that is how most people that use these reports do their data collection on a year-by-year basis. And if we now look at the Pillar 2 reporting itself, general information I assume will have to be there, and the report that was published in December last year shows us more or less how things are going to look. So they want to know about the M&E, the name of the M&E group, the start date of the fiscal year. All of this stuff is in the CbCR already. Not whether you do the amended return, but who is the UPE, who's the constituent filing entity. All of that data is here. So when you have your CbCR data, you basically can copy that down to your Pillar 2 report, and the Pillar 2 report is in blue. The CbCR data throughout here in the Excel sheets are the ones that have yellow and green. but you have the name of the group in your CbCR data. You have the starting and the end date of the year. You will have to determine whether it's a amended return, yes or no. And then there come things like the role of the M&E, right, in 1.2.4, and there's also 1.3.1, the consolidated financial statement types, and then the explanatory guidance to the report explains to you what you need to do here. And it does, it says in the guidance, you have notes, they follow exactly what you need to do in the report. And they look something like this. So note 1.2.4, which would apply for the role. The relevant option shall be a designated filing entity, a designated local entity, or a constituent entity. In 131, you would also have to refer to Article 10 of the Globe rules, and you need to say whether it's subparagraph A, B, C, or D that would apply, which means that obviously you would need the Globe rules and maybe even the Globe commentaries next to your filing as well. But that applies for making these reports all throughout. You can have your data, you can collect your data, whatever you want. I mean, here I suggest you do it in Excel. But when you fill in the data, you will have to refer to these guidelines, both the reporting guideline and the Globe rules, on how to know what to fill in where. And obviously the best way to make sure that you are consistent in your references is to make some drop-down lists, which I've done here. So 1, 2, 4, the entities, you can have a designated filing entity, local entity, or constituent entity, and then the rules to Article 10. Concerning the definition of consolidated financial statements, you can pick letter A, B, C, or D, and one would need to fill that in. So far so good, and the reports look relatively simple. Things get a little more complicated when, for instance, the template that they show you in the OECD documentation looks like this, and you've got changes and you've got jurisdictions, you've got 2 or 3 columns per time, right? You can almost see how this will break down in XML, and then you also have various numbers of tables. So when you transfer this into Excel, it may end up looking something like this. You can see 2.1 is the ultimate parent entity. I have not copied the data here because that table was too simple, but then 221 gives you the constituent entities and members of the group. Again, here, what I've done is I've simply copied or made Excel references to my CbCR reports that I've copied and just, fill down everything you have until you don't have any more entities. And then you can work with XLOOKUP functions to find the TIN, to find the country. You're going to need to find out what the rules are that are applicable to them. And again, you are going to need drop-down lists for the applicable rules because there's a number of choices that you need to make and fill them in as you go along. And then when it comes to the effective tax rate and top-up computation, and most important, the characteristics of jurisdiction. So now you talk more about the jurisdictions themselves, and you're talking about the exceptions applicable. So now we come to your safe harbors. This is what I think the permanent safe harbors will look like. We don't know what the transitional safe harbor will look like, but since the data is largely the same, I added this template. But you can see there's a lot of data required again. Again, you do it on a jurisdictional basis. You can pull some of the data from your CbCR report that you have, but one has to remember either the revenue, I assume, will remain the same. The issue is your taxes, right? Because Pillar 2 transitional rules and general rules are not exactly the same as the CbCR definitions of what your taxes are, but you can pull the data as a starting point and then refer to it and double check it from there. Again, you will need a lot more guidance from the transitional rules itself. We don't really have detailed guidance yet. You would need it from the report and the template itself, and you would need to have the Pillar 2 rules. And then again, I expect that companies will add tabs of their own, as you can see here in the green, where they pull data from SAP or HFM or Cognos, whatever works best for you, and where needed you can do a combination of all of them, work with pivots, work with tables, and then simply put cell references in, for instance, row, well, whatever this is, let's say E2 for Belgium, or tax or EBT from company data 1 or company data 2. And that would be it. This is just a very first start of a tool that I'm building. If you are busy building your own tool, or are interested in using this tool for your company, let me know. Of course, the big thing that we're waiting for is the XML schema, because really you cannot make any sensible Excel model until you know what the XML schema is going to look like, both during transition period and for the final reports. And I think the sooner the OECD can come out with this, the better. I mean, companies should have time to develop these things for themselves so they don't have to pay thousands, if not tens of thousands of euros again for third parties out to make a fast buck. I hope you find this helpful. Comments and suggestions are always appreciated. I will follow this one up with a further video or going into a little more data extraction details in a week or so. Bye for now.